Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And something I have been nervous about on my channel and tried to share with you is I think we may have hit the seasonal peak for housing inventory. I don't know if the inventory peak has already passed or we might get a slight bump this month. But one of the fears that I have for the rest of 2022 is the housing market actually retreats. I believe as we sit here near the end of August 2022, I believe we have a Federal Reserve that is focused on inflation. I think they finally, quote unquote, get it. What does that mean? I think that means they are going to continually raise rates, even into a potential recession, even into job losses. What does that mean for us in housing? Frankly, it means this little 6-week, this little 8-week blip we had where the 30-year mortgage went down. I think it's going to go back up, right? It wasn't that long ago that in a 100-day window, we saw rates go from 3 to over 6%. I think we are back on an uptrend. And I think that is going to cause the Fed broke housing scenario to play out even faster. My fear is with rates rising, demand destruction is obvious. I think Black Knight once reported that an estimated 13 million people who could get approved at 3% can't get approved at 6%. Demand destruction is easy for all of us to understand. What I think is unusual, frankly, uncomfortable for most real estate channels to think about, to talk about, is supply destruction. Supply destruction is not normal. It just isn't normal. I've been doing this business for over 20 years. I've been looking at the economy for over 30 years. And supply destruction in housing really hasn't been a thing. I didn't really know the housing market in the early 80s in the S&L crisis. So I can't speak to that. But we didn't have really supply destruction even in the Great Recession. Sure, we had foreclosures, we had raging inventory, but supply was there. I mean, shoot, the peak supply of my investing career was the Great Recession at over 4 million active listings. Today, we're, nowhere near that. So what I fear is between late August and the rest of the year, we are going to see 30-year mortgage rates go higher. Because I believe that, I believe there is going to be even more supply destruction. What people fail to understand about the housing market, at least the YouTube channels who call for crash fail to understand, especially a price crash, is in order for a move-up buyer to sell their first home and move up to a bigger home, it has to make economic sense. And I ask you to do the math for yourself. Calculate a mortgage rate on your home. Then let's assume you're buying a bigger home for an extra 50 or an extra 100,000, but the interest rate doubles. Do the math. I have done this now with over 100 people, and the average is a double. Your payment doubles. I have yet to meet anyone who says an extra bedroom is worth a double of a mortgage payment. Because I believe rates are rising, because I believe the supply destruction only gets worse, the math doesn't work out. We are going to see less first-time homebuyer homes. We are going to see less move-up buyers. The entire housing market is going to, ultimately fall 50% transactions. We've already seen 30%. It's just starting. So my greatest fear is we are going to see inventory fall as we head into the end of the year. If you've been on my channel for any length of time, you know that I called July 20th an important date, and it was. It was that spark, that fire that caused buyers and sellers to react. Buyers got scared. They pulled away. Sellers FOMO'd, fear of missing out, and listed. Now we are seeing cancellations. We're going to see expireds. We're going to see this rush of inventory pull back. I have had early reports from both Phoenix and Las Vegas that they are seeing the rate of change significantly reverse. Inventory in those two markets has yet to reverse, but the additions and the additions to inventory have greatly slowed down. So I wanted to go in and look at a data source and see if my fear is appropriate. Because I fear if we go into the winter months, which again, seasonality are slow, and inventory falls, the market's going to continue to be broken. So I went to Redfin and pulled up their most recent data. So let's take a look at it. This is Redfin's data set. You just go to their data center, redfin.com, news data center. So I wanted to look at inventory, new listings. So this is a weekly chart that Redfin puts out. And then, the lines are there for the colors. So we're basically looking at the black line. The black line is 2022. And these are year-on-year numbers. And you could see that, yes, most recently end date of 8/14, August 14th, so about 2 weeks ago, inventory is down 13% year-on-year. And you could see that inventory through the rest of the year goes down. Right? New listings go down. I expect the same thing, if not worse. Right? What was 2021? So orange was 2021. So let's look by October 1st. Let's do October 3rd. So October 3rd, there was 96,000 new listings, down 3% year on year. I think it's going to go much lower than that. I think, again, this assumes the Fed is raising rates and the 30-year goes back over 6, maybe goes up to 6.5. Fed broke housing on the demand side is easy to understand. I'm trying to highlight that the supply side is equally broken and equally a problem. So I think supply of homes in inventory is going to go down, not up. What you have here is in quantity, here is in percentage. Here you see the big change between 2020 and 2021. They're kind of mirrors of each other. That's the COVID shutdown. That's the opening. And then you have some housing markets, median sales price. You can see the national number here. It was what, 430 in May and 428 in June. But you can see there are some markets like Los Angeles that have rolled over, 10 grand. Seattle, quite a bit, 34. Boston is still up. Boston went up 15. DC went down a grand. Chicago went up 10 grand. And what is this? March. Where is it? Went up 12 grand. What is that? Philly. So again, this is Redfin data tabulated by Tableau. Pretty cool stuff. You can go ahead and look at average rent as well. One of the things that, again, historically has been true is as housing prices go up, rent goes after. So again, I think the rent is, especially for single family homes, is just starting. I think that's why I think inflation at the core level is going to be a lot more sticky. So again, if I kind of summarize the rest of the year, my current thinking is interest rates go up, inventory goes down, transactions crash. I think transactions are already down, generally speaking, 30%. I think the National Association of Realtors chief economist Lawrence Yun is trying to paint a bottom for transactions, and I don't think so. I think we go lower on transactions. So again, when in doubt, you can go ahead and check out Redfin. They put out a lot of data. It's updated weekly. Let me know what you think. I think there's a lot of people in YouTube world talking about housing crash. Most of them, I think, believe that inventory goes up. And I don't see it. I think the Fed broke housing. I think they've destroyed demand, but I think they've also destroyed supply. Let me know what you think. Take care of yourself. Bye-bye.